Hello and welcome to this week's Australian Stock Market Report. This week we'll be looking at why timing the market is more important than time in the market. Then we'll get into the market so I can share with you my thoughts on the Australian stock market, where it's heading, along with answering your questions and looking at stocks for you. Hello, I'm Gillham, Chief Analyst at Wealth Within, and we're Australia's most trusted stock market educators. Now, before we move on, thank you for showing your support for our channel and hitting that subscribe button. Now remember, as you subscribe, click the little bell on the right of it so you keep up to date with our latest video. Also remember to tune in to our live Australian stock market show every Tuesday 7 to 8 p.m. Australian Eastern Time. Now, this is the show that you get to ask us, the stock market education and trading experts, to look at your favourite stocks and answer all of your most burning questions. Investors are continually told to leave their money with professionals and to accept swings in the market over the long term, as many believe you cannot time the market. Those who advocate time in the market attempt to discredit supporters of timing the market by pointing to the small number of times the forecaster was inaccurate in order to prove their point. With the fall into the March low and subsequent rise up, many investors attempted to time their exit and entry into the market, and so far many have been rewarded for their decision, but there are plenty that got it wrong. That said, in ASIC's recent report on investors trading during COVID-19, they indicated that retail investors get it wrong most of the time, which I tend to agree with. So what is market timing? Well, put simply, it's about managing risk, no more, no less. If the risk of holding an asset becomes too high, it should be sold. Just as importantly, if the risk of holding an asset decreases, it should be held, provided it supports the investor's objectives. Every week we predict what we believe the Australian market will do in the short, medium and sometimes long term. And while we get it right the majority of times, sometimes we don't. However, just because a prediction does not unfold does not mean that market timing is not an effective strategy. While we're able to forecast moves in the market with an incredibly high degree of accuracy, market timing does not work 100% of the time. Therefore, you need to be prepared that some predictions will not be correct. Remember, market timing is about the risk of holding an asset first and foremost, and not about attempting to grab some quick profits as retail investors are trying to do right now. While some will get it right some of the time, most will get it wrong more than they get it right. Consequently, those who are lucky in getting in recent times may be in for a big shock, as there's high probability the tide will turn and they will lose the gains that they've made over the past few months. So what were the best and worst performing sectors last week? Well, materials ended up as the best performer last week, and it was up over 2%, and this was followed by healthcare, which was up 1.43%, with financials just in the red for last week. The worst performing sectors include industrials and energy, which were both down 4.28% last week, and they were followed by information technology, which was down 2.7% for last week. Looking at the ASICs top 100 stocks, the best performers include ResMed, which was up over 7%, AMP was up almost 6%, and JB Hi-Fi was not far behind, up 5.65%. Now, the worst performers include Flight Centre, and that was down over 16%, Challenger was down over 13%, and Qantas, after announcing that it was shedding jobs, closed down 12.81%. So what do I expect in the market moving forward? Well, let's get into the charts of our S&P 500 All Ordinaries Index update for this week. We'll also answer your questions and look at the stocks you've chosen for me.
Please remember that this report is an educational tool. While Wealth Within holds an Australian financial services licence, the information featured in this program is general in nature and therefore should not be relied upon. Before making any investment decisions, you should consult a licensed professional who can advise whether your investment decisions are appropriate for you. We hope that you enjoy this week's report.
Well, hasn't the market been really interesting since I've been away, and you've had the lovely Janine doing these reports, and hasn't she done a fantastic job? And so if you've liked what Janine's done over the last 3 weeks while I've been away, just stick a comment down below. She'd love to hear your thoughts about what she's been doing and how well she's been doing. But I think she did a great job, and we're going to get her on these reports a lot more often over the coming weeks and months as we go through. But the market, as I said, has been quite interesting, it was quite bullish before I went away, and as I said before I went away, I was thinking the pendulum had swung into being a little bit more bullish than bearish. But a week can be a long time in the market, and the last couple of weeks has been quite interesting. So let's go and have a look at the charts of the All Ordinaries Index. Now, on your screen right now, you'll see that it's actually a weekly chart of the All Ordinaries Index. Now, see these last 3 weeks while I've been away, the market is slightly down on where it was. I mean, last recording I did was this week ending the 5th of June. So you can see how the market's just been sideways and down. We've had 2 of the last 3 weeks. It's actually closed lower. So there's the lower close there. Higher close on this week and a lower close there. But if we go right back to here, back to the end of May, the market really hasn't risen that much. And this is where I want to sort of have a look and show you. It hasn't been pushing through like a lot of people expected. And we can see here 2.38% rise over the last 4 weeks since that last close here. So it's tipping over and momentum is slowing down. And so we can see here the nice strong rise here, a little bit of a pullback, very strong rise here, and now it's slowing down. So momentum in the market is slowing. The Dow was down last Friday and quite heavily, a couple of percent there. So I would expect our market to open lower this week. But the interesting thing is if the market trades below that low there of 5830, it could go a lot further. And I wouldn't hesitate to expect that the market could fall somewhere, at least somewhere in that sort of vicinity of around about 5,400-ish, maybe 5,300 points should it fall back. It's around about 8 to 12% is a normal pullback in a bull market. And we need to be cognizant that whilst I think the market's a little bit more bullish, there's still a big chance that our market will retest the lows in March. Now, in my report, the longer the market falls now in time and price, so if it falls over several weeks and it falls more than around about 12, maybe 15%, then we could see a retest of that March low. That March, I think it was like 23rd of March, I think it was from memory. So we could see a low, or the market test that, possibly even go below that. So we do need to be prepared for that in case it does fall a lot more heavily. And it will depend on what's going on in the US. I mean, this week the jobs reports are coming out in the US on Thursday. We're seeing the end of the second quarter earnings with the end of June. We're in the last 2 days of June, so second quarter earnings are going to come out in 3 or 4 weeks. So it'd be interesting to see over the next month what the market actually does. But right now, I think we should expect next week, or this week, sorry, here in Australia will be down. I think the Dow will be down this coming week as well. The Dow's got a short week as well, being Friday is what they call 4th of July, so they close on Friday. So the next 4 days will be interesting for our market as well. But right now, just sit tight. Don't get out and start buying stocks. Don't try and bottom pick. Don't try and pick falling knives if stocks are starting to fall away. Just use your stop losses and making sure your exit stocks or the stocks that you've got, make sure you do have those stop losses to protect your capital. So, but let's get into the questions that you've been asking me over the past couple of weeks. Okay, and the first question we have today is from Noni, and Noni says, Westpac, like other banks, dropped down almost 45%, then gone up 35%. How long do you think it will take to trade to around $25 again? Thanks. And, geez, interesting question, Noni, and I think it's not a question that you could be asking, because I find a lot of people say, well, when's it going to be this price again? And it's not about that, because the stock could go up it could continue to fall. Sorry, if I say that again, being on holidays has not been good for my mouth. It's not working properly at the moment. And it is cold in Melbourne. I think it was 1 degree this morning when I got up, so it's still a little bit bit chilly here in the studio, but you don't think of it like that, because it's about, is it a stock you should be buying right now, or is it not? Trying to wait for it to fall back to a level where you think it's comfortable with is not necessarily a smart or wise move in terms of buying and selling stocks. But let's go and have a look at the chart, and we'll have a bit more of a talk about it anyway. But Westpac, all the banks, probably Westpac and NAB aren't my preferred banks, but looking at the screen right now, you can see here the big fall that Nonny was talking about, this huge big fall all the way down through into March. All the banks made their all-time highs back in March, April 2015, so they're all very much falling heavily now. What Nonny's asking about is getting up to $25 again. Right now, it's not looking super strong. I don't think the banks are fantastic. I'm assuming $25 is what you paid for it. You possibly bought it at $25 and then it kept falling away into March, and I think possibly that you're trying to get your money back or get out of it if it gets back up to $25. Right now, I don't know how long it's going to take, and it's not the point. If you still own this stock, there's no reason to sell it. That's simple. So hold it while it's rising up, get out of it if it starts to fall away. So if this starts to fall away, then you might like to exit the stock. And currently it's closed last week. See how it closed a little bit higher, although there's a bit of weakness, but there's been a little bit better than the overall market. So just hang tight if you do own it. If you don't own it, I wouldn't be looking at buying it right now. But let's get into the next question that we've got for this week. This one's from Antonio. He says, hello, I've ordered both of Dale's books and can't wait to read them when I get home from the mines. Can you please do a review on Webjet and Novanix, as I'm thinking of investing a little bit in them for the long term? Best wishes, Antonio. I'm going to have a look at Webjet for you, Antonio, so I'll bring that up on the screen. I'm not going to look at both stocks at this point in time. Really, what I just suggest you do is know why you're buying and why you're selling. Right now, Webjet has moved up like the rest of the market off that March low, or April, there it is. So that low there, 225, it's risen up quite nice and strongly, but it's been bearish the last few weeks. At this point in time, I'd be sitting back holding my on my hands at this point in time. If we can get some support above that sort of $3-ish mark here and it starts to move up again, that would be a better time to look at it. But right now, anything in the travel industry is going to be a little bit dangerous. We saw last week Qantas announcing getting rid of thousands of jobs. We're seeing the tourism industry. Now, I went up the east coast of Australia. I was catching up with staff and clients of ours for the last 3 weeks. So it was a little bit of a holiday, a little bit business, or mainly a business trip with a bit of holidays. But I was driving. But it was interesting to see the tourism industry. It was decimated. There are a lot of restaurants that are really on the edge. There's a lot of tourism operators that are very much on the edge. I was talking to a lot of business people as I was going up there. Now, Webjet obviously is in overseas in terms of, booking flights, etc. like that. Australians aren't going to fly that much, so I don't see where Webjet's going to be a great opportunity. We're seeing struggling with Qantas at the moment. So right now I just sit on my hands and anything to do with tourism. And wait the dust to settle pretty much. That's what I would be suggesting. So let's get into the next question that we've got. This one's from Jayantha, who says, hi Janine, thanks for the stock review. I've just purchased both Dale's books. Thanks, mate. As your advice, and looking forward to reading them. I've recently bought Nearmap NEA at $2.30. What are your thoughts? I actually like Nearmap. I saw them many years ago at a microcap conference, probably about 10 years ago, and I liked what they were going to do. They were just a little bit small for us to actually invest in, or me to invest in. But let's have a look at Nearmap right now, because it has become quite a nice stock, and you can see here how it's had a beautiful big run right up from 2017 right up to $4.30. More recently, it dropped right down with the COVID-19 down to that 83-cent low. But currently it's up around $2.10. So it's moved up beautifully there. So Nearmap is a what I would call a great company to look at. It's held up very nicely. So would you bought it at $2.30? I think you probably bought it too high at this point in time, but that's okay. Don't worry about it. If you're holding this stock, hang on to it unless it starts to fall away. So if it starts to fall away sort of below that sort of $1.90 sort of area, then you might look to exiting. I do hope you have a stop loss on it. We'll teach you that in my book. So the book you've got. So we'll talk about different stop losses in the book that you can use, different exits and entries into stock. So as you read the book, you'll get a lot more knowledge and understanding what to buy, when to buy it, and when to sell it, which is even more important. But right now, hang on to it. It still looks quite nice to me. It may push up, but if the market is a bit bearish over the coming weeks, which is possible, we could see this float down a little bit, but you want to minimize your loss. So the stop loss I talk about in my book is 15% below your buy price. So take your $2.30, multiply that by 15%, and whatever that figure is, then take it off $2.30, and if it falls below that, that's the exit signal that I teach in my book. But let's get into the next question. But thank you for buying my book, and thanks for your question. The next question we got from Bob, who says, "Hi Dale and Janine, can you please take a look at REA? It has always been one of the best stocks in the real estate sector, and recently during COVID period it has had a really nice run up from the bottom. From my analysis based on the trend lines from Dale's book, it didn't look like it had a trend line entry on the monthly and weekly charts, and I was wondering how you can capture these opportunities in the future." Well, Bob, interesting. We'll go and have a look at REA, but trend lines are just one rule, and one rule won't fit every single situation, and it's sort of like if all he's got is a hammer, then everything looks like a nail. Now you can see here that on the monthly chart there's no trend lines down on here and no trend lines down on the weekly chart. So basically it's depending on what type of investor or trader you are. If you're an investor, then on a monthly chart those trend lines will work, as we talk about in my book. Looking at the top stocks, they'll work over time, but there'll be periods where they won't work, and this is what I was talking about a little bit earlier in this report when I was saying timing the market. Sometimes you're going to get it wrong. So a trend line might be right 7 times out of 10 on a particular stock, but it's going to be wrong 3 times, or you won't see that. But over a period of 10 years time, trading or investing over 10 years time, you'll actually make money using the tool. So this is just one stock it hasn't worked on, but right now it is looking quite good. It's just recently it hit its all-time high again, so it's moved right up to that all-time high there of, what's the all-time high, $113. So last week it hit $112.65. Interestingly, it came right back towards the end of the week. So you can see here on the weekly chart here it closed really low. It is due for a bit of a pullback, so it'll probably fall away a little bit. If it doesn't fall away sort of too much, maybe holding up around that $90 mark, and then starts to rise again, this could break through that all-time high. But as I said, I do like the stock. It is one of those good stocks that was a microcap many years ago, and has really built a good solid basis, basically. Sorry, no, that wasn't the micro cap. I was talking about near map then. As I said, going on holidays doesn't do great things for your brain sometimes, does it? You get a little bit muddled. But I do like REA at this point in time. So if you do own it, hang on to it. If you don't own it, I wouldn't be looking at getting into it right now. I'd wait for the bit of a pullback and then see what happens. But thanks for sending your questions in, and thanks for watching till the end of the video. I'll go and get my mouth fixed so it works properly. I'll warm it up. But if you do have any questions you'd like me to answer, just stick them below there. I'll get to answer them, so just get your fingers on those keyboards and get them typing and ask me some great questions. Remember, put on your question why you want to, if you want to buy it, if you do own it, if you don't own it, what are you thinking about? If you're just putting BHP, look at BHP, then your questions are going to get ignored. We do want a lot more information from you about why and what you're doing and what you're thinking, because that will mean your question will get looked at. We do get a lot of questions on this channel, and we can't help every single person. But remember, here on this channel we do these Monday market reports every single week, and we also do our live stream every Tuesday at 7 to 8 p.m. the Australian Stock Market Show. So we look forward to catching you there tomorrow night. So hit that subscribe button now, click the bell on the right of it so you know when we go live with other videos. Now, I'm Dale Gillham here. Goodbye, good luck, and good trading.